Our discussions on the IAS 16, which deals with the property, plant and equipment. In the last two discussions, we saw what is cost of acquisition, what is the components of cost of acquisition, how will the subsequent recognition happen, what is depreciation, accumulated depreciation. We also saw what is revaluation and impairment. But still some more issues are there, and in this discussion we will touch upon the concept of components and IAS 16. IAS 16 in case of exchange of assets, and if there is a PPE which are held for sale, and what are the disclosures which have been prescribed by IAS 16. Let me start with the components. One of the important changes or suggestions of IAS 16 is that wherever possible, the asset should be depreciated and shown on the basis of the components. That means allocate the amount recognized for an item of PPE on its component parts. For example, furnace and a furnace linings can be two different PPEs. Aircraft galleys and aircraft are two different components. The elevators and buildings are two different components. So instead of charging depreciation on all the assets at the same time, at the same rate, at the same method, you have to use different depreciation methods and also different depreciation rates for these components. In fact, the component method is mandatory under IAS 16. So there is a need to find out, take stock of the assets, observe the PPEs, find out the components. A component is that part of the asset which will have a significant part of the significant cost of the total cost of the asset. Similarly, if there is a major overhaul that you want to undertake, or you are planning to conduct a major maintenance, and if that is a capital expenditure, then treat that as a separate component, charge separate depreciation rate, and if necessary use a different depreciation method too. So the component concept in IPE has been very clearly stressed. Similarly, if A Limited is exchanging some of its assets with other assets of other company, what is the value of that asset has been very clearly deliberated and given in IAS 16. But exchange, when you want to understand the cost, you have to find out whether there is an exchange is for a similar assets or whether the exchange is for a dissimilar assets. Let me pick up the dissimilar asset first. If the exchange is for a dissimilar asset, I am giving a plant, getting a vehicle, giving a vehicle, getting furniture. In that case, it is a dissimilar in nature. In that case, the cost of asset acquired is the fair value of the asset given up, adjusted for any cash if given or received. So that means the cost of the acquisition of the new asset will be treated as the cost of asset acquired will be treated as the fair value of the asset given up. And if there is any loss or a profit because of this, that will be shown as an income statement as a separate item. However, in case of a similar asset, it is not the fair value, but the cost of the asset is the carrying amount of the asset given up. In the previous case, it is a fair value of the asset given up, but in this case, it is a cost of it is a carrying amount of the asset given up. And the most important, the loss or the profit, if any, will not be recognized at all, because assets, because you are showing it as a carrying amount, the concept of the loss or the profit will also not emerge. Whereas in the previous case, because you bring in the fair value, the difference is treated as the gain or a loss. Whereas in this case, you show that as a carrying amount, so no profit, no loss to be shown in the income statement. Sometimes some assets are, though it is PPE in nature, but they are held for sale. If they are held for sale, I am not using that in my day-to-day business like any other property, plant or equipment. In that case, in principle, you do not treat them like any other PPE. They will be treated more like inventory. So, the carrying amount in this case will be shown as either at the lower of the carrying amount or the fair value, like inventory valuation cost or the market value, whichever is lower, and no depreciation on that, because the entire cost here is principally recovered through the sale. So, therefore, if there is a PPE or which is held for sale, then do not treat like any other PPE which are not held for sale. The disclosures, as usual, the IAS 16 has not is more or less same like any other standards of any other country, that it says that you have to disclose the methods of depreciation, the useful life of the assets, depreciation rates used or the life, the gross carrying amount, the accumulated depreciation, the depreciation for the period, and reconciliation of the carrying value. All these are to be disclosed in the financial statement. So, therefore, if you see right from the beginning IAS 16, we saw the cost of acquisition, we saw the initial recognition should be at the cost of acquisition, the subsequent recognition you have an option of following the cost model or the revaluation model. Both in cost and the revaluation model you have a right to charge depreciation, you can go through the impairment. So, the subsequent will be cost minus the accumulated depreciation minus the accumulated impairment, and if there is a revaluation, corresponding adjustments have to be made. And the special cases of exchange or the special cases of components have to be taken care of under IAS 16. So, IAS 16 is one of the important accounting standards under the new regime of IFRS, and most of the companies, particularly in India, there is a need to understand the effect of IAS 16 on the balance sheet as we shift from or converge from existing accounting standard to the IFRS. Thank you very much.